Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. And today we've got a guest in studio. We're excited to have you here. Nick, before we get started, would you mind just giving us a little bit of introduction?
Yeah, my name is Nick Johnson. I live in San Diego, California. I'm currently a federal law enforcement employee. I've been doing that for about 14 years. Just a regular W-2 pension earning 401k kind of guy.
Awesome. And today we're going to kind of talk to you about your story, right? How you got introduced to the infinite banking concept and what's happened over here in the last about year and a half or so, right?
Absolutely.
Awesome, man. Well, let's get started. Tell us about how you got introduced to the infinite banking concept.
So one day I was scrolling the news feeds on Facebook, right? And we all see those sponsored or targeted ads that pop up now and again. And as I was scrolling, I saw an ad that kind of discussed generational wealth. It was an ad for a book, something like what the Rockefellers would do and how they've obtained wealth over the years and how they've been able to retain that wealth and pass it along down to their children. So I was interested. I said, man, I'll spend the $9 or $10. Cool. I got the book. When it showed up, I read it, man, and it blew my mind. I thought to myself, man, this can't be true. This can't be accurate. There's no way that this is real.
Nick, what was in the book that blew your mind? Like, what was it talking about that?
Yeah, so the theory was kind of back in the day before the 401k became a thing, people used whole life insurance to save for the future. Mm-hmm. And I thought that was kind of interesting or different because that's not something that, is mainstream right now in society. And it talked about you could park your money and then you could actually leverage and reuse that almost same money somewhere else to make money twice. And it was almost kind of hard to comprehend that could be possible.
Okay, so you read the book, got excited.
Yep.
And then what happened?
So I wanted to kind of absolve my suspicions, make sure that it's a real thing and not some scam. So I immediately went to Amazon, purchased some additional reading material, and then I hit YouTube looking for kind of topics on the infinite banking concept, mm-hmm. and just to kind of like hear from different people, right? So different authors, different speakers, get different perspectives.
Yeah, that's smart.
Looking at the positives and negatives. And once I did that, I think I probably ended up with 10 or 12 books and maybe 100 or so hours on YouTube.
Man.
Yeah, I finally felt confident that, man, this thing's pretty real.
So when you're doing your research, right, you kind of glazed over the pros and the cons. What were some of the things that you heard negative about IBC?
Well, there's some people out there that don't believe in whole life as a savings vehicle. And you always hear people say, oh, you should not do whole life because it's too expensive. You should purchase term insurance, mm-hmm. and then invest the difference. Mm-hmm. So that's kind of the mantra that was out there as far as, one of the cons.
Mm-hmm. When did you come across Nelson's book, right? And the reason I ask is I had a similar background as I came across this idea, but I was first introduced to Nelson's book, and then I went and found every book that I could find that touched on it. So very similar to you in that regards, but I always go back to Nelson's book. When did you come across kind of the original?
So Nelson's book was the third book that I purchased.
Okay.
And his book is, analytical and deep, and I think it kind of gives you one of the best overall understandings of the concept and how to utilize it and how to benefit from it.
Absolutely. So you did your due diligence, right?
Yep.
So looked at some of the pros and cons and decided this was something that you wanted to do. What is your first step?
So once I found Nelson Nash's book, Becoming Your Own Banker, I found out about his foundation, the Nelson Nash Institute, I apologize, and I went to his website, mm-hmm. and I found out that there's a practitioner finder on there. Mm. So I clicked that link, and I try to find somebody that's kind of local to me, somebody that I could meet up and talk about the concept with. And unfortunately, there was nobody nearby in my area, nobody even in my county. So I started looking a little bit further out, and I found you guys here in Vegas. I'm from San Diego, so I figured it could be a quick flight if I needed to come, meet you guys and talk business and talk about the concept.
You were really just looking for a reason to come to Vegas, weren't you?
Not exactly.
Nick, one thing I would like to explain to the audience is what a practitioner is.
Okay.
And what Nelson did, I don't know, maybe 10 years ago?
That's been a while.
Maybe not that long ago, but what he found is there was people that were portraying that they were teaching infinite banking, but they weren't doing it correctly. So in order to protect the concept of the brand infinite banking, he created the practitioners program. And in that, in order for you to be a certified practitioner, you have to take a test. There's a lot of education. You have to work with a mentor, and there is a code of ethics. Right. And that allows you to truly use the infinite banking concept, because technically, if you're not a practitioner, since infinite banking is copyrighted, they're not supposed to be using IBC or infinite banking unless you're a practitioner. Oh, but okay. So you went down there, you found us.
I did. Yes.
Okay.
I found your face.
Okay.
That's a little scary.
Yeah, and you still called us?
I did.
So then how was the process?
So what I did is I followed the instructions on your website, and I set up a discovery call, which I guess is kind of like the first step in the process.
Mm-hmm.
So we arranged a time where you and I could speak. We had a quick phone call, and you asked me some questions kind of about my goals and my objectives and what I wanted to do and what my life was like now and what retirement looked like. And that was the first step in this process.
Okay, great. So then you went through our education process.
I did, yes.
Right. Okay. So then now it's time to start your first policy.
Okay.
So if you don't mind sharing, how did you determine the premiums?
Okay. So my first policy, so like I mentioned before, I'm a federal employee. So we have a 401k program called the TSP, which is the Thrift Savings Plan. That's our long-term deferred compensation program. So I put money into that every paycheck, and I basically max out the amount that you can put in a year. Mm-hmm. So the maximum currently right now is $19,500. So I put that in every year.
Okay.
And learning about the concept, I realized that it's better for me to use my money now. So at that point for my first policy, I basically took the $19,500. Now I'm not putting that into a deferred compensation program. So I'm going to get it on my paycheck and have to pay taxes. So I backed out what the taxes would be. Mm-hmm. And that left me with roughly a little over $1,000 a month. So that's where I started with the policy size for my first policies, right around $1,000 a month.
Okay, so all you really did is just redirect what you were investing.
Exactly.
And just put it into a different vehicle. Now, what made you believe that infinite banking was going to help you achieve your goals versus continuing the TSP or the 401k?
So this is kind of a long story. But as I grew up, my parents had rental real estate, right? So I've been able to see what that has afforded our family to do over the years. And I'd always had a goal that I wanted to have rental real estate. However, I'm like most Americans, right? Instant gratification. So I didn't necessarily always live within my means. Credit card bills, travel, eat out, Starbucks, the coffees, right? Kind of do what people do. And living the way that I was living, I was not contributing to my personal savings account where I would have cash accumulated that I could use as a down payment for rental real estate. So what I realized is that by retirement, everybody in our workplace kind of speaks of, hey, let's max out that TSP. And then when you retire, you should have $1 million, and then you can retire and you're safe. So what I did is I kind of did the math. $1 million. I know there's all kinds of different ways to decide how much you should utilize out of your retirement accounts when the time comes. But I kind of went by that 4% rule people use and say, oh, you should take 4%, but no more out of your nest egg. That way you don't run out of money before you run out of life. Well, 4% of $1 million is $40,000. Back out taxes. I live in California. So
you left with $10?
It's more like $1.50. But the number roughly comes into around $2,200 a month. So I started thinking to myself, man, save for 20, 25 years while I'm working. all just to get $2,200 a month at the end. That doesn't seem like a whole lot of money when that nest egg of $1 million seems like a very large amount.
Yeah.
So what I did is I said, man, what if I use that money now and I put it into IBC? I can utilize it now, right? So it's earning the gains within the policy, but then I can leverage it, loan it out, purchase real estate, and it kind of solves a bunch of problems all at one time, because then I would have money that I could use right now to purchase the real estate with down payments, get that cash flow right away now instead of when I'm 50 or 60, and that could pay back the policy loans, and I could just kind of wash, rinse, and repeat and continue.
I had a question just on, I was thinking back to when I got started. I was kind of a lone wolf, right? And I have to imagine that you were too in this scenario, as far as coming across this idea when everybody else around you is saying, hey, max out your TSP, right? Our goal is $1 million. How difficult was it to kind of make that decision kind of on your own, right? I mean, nobody else is doing that, implementing this strategy. Was that tough?
Yeah, when I first found the concept, I didn't know anybody else that had ever done this concept, or I didn't know anybody else had even heard of it. So when you're talking about finances, you're talking about the future, you're talking about retirement, I mean, those are big things and they're very scary.
Mm-hmm.
They can be scary for people, right? It's kind of intimidating. And getting to the point where I'm ready to make a decision, like, hey, I'm going to stop contributing to the one thing that just about everybody in America always tells you to put as much in as you can. It's a big decision, especially when it's on your own and you don't have anybody else that's already done it.
Yeah.
So it was definitely intimidating. But at the time, through the education with you guys, the books, the YouTube videos I found, I felt at the time that it was the right decision, and I'm glad that I did.
Well, now you did a couple things when you did your first policy. One, you redirected what you're putting to your TSP, or kind of like your 401k, but you also took advantage of the CARES Act.
Yeah, talk about a blessing in disguise, right? COVID came about, and it's unfortunate for a lot of reasons, we could discuss later. But the government put into play a chance for people to take advantage of their 401k savings by allowing you to take a penalty-free withdrawal up to $100,000 to help with expenses from, loss of business, loss of work, things of that nature. So I have a sole proprietorship, or I did at the time, that was really struggling. So that allowed me to utilize the CARES Act. I took out $100,000, which was the maximum allowable amount the government would give you penalty-free. Mm-hmm. And I made that as my first kickstart dump-in deposit into my policy.
Okay, so you already had a big chunk of money, or a lot of cash value immediately.
Yeah, right away, I think almost instantly, I think I had maybe 85,000 right away out of the 100 that I put in.
So what'd you do with that?
So about a month after I started my policy, once everything kind of settled and got rocking and rolling, then I reached out to an insurance company and immediately took almost the maximum loan, not quite. I took $80,000 out, and I corrected my finances. First of all, I paid off revolving debt that I had, credit cards and whatnot. And then I used the rest and started shopping for real estate. Okay,
because one thing, I think it's an easier obstacle to redirect. What I would say, one thing I do want to correct you, Nick, is, and for us, words are very important. We don't view 401k as a savings, right? Savings is money that you're not going to lose, but investing is money that you could lose. So I just want to be clear. And I think a lot of people have this misconception where they think they're saving money in their 401k, but they're really doing is investing. Now,
or speculating.
Yeah, speculating. I think it's one level or one obstacle to say, okay, I'm going to redirect what I'm putting in my TSP. Okay. But it's another one to say, hey, I'm going to take money out. Right. And so, but what I'm hearing, and one thing we didn't talk about was your goals, is that you wanted to create passive income.
Yeah, absolutely.
Right. And you didn't want to wait till you were 59 and a half.
No.
Right. And you can't do that inside a 401k.
Cannot.
Right. So that's why you funded it. Well, let me just, that was a long-winded question. I don't even know what the question was.
Is it a question, or you were giving the question and answer?
It's a statement. Yeah. I did. I answered it for you.
Thank you. I appreciate that.
So you're good. You're good. Let's move on. Cameron, save me.
All right, so we've got the first policy in place, right?
Mhm.
Now what you've done is you started to kind of look for opportunities. Were you that's one transition there that I think a lot of people kind of miss is, prior you're just shoving money into a 401k and maybe the mentality of that, the rhythm, the monotony of that versus, hey, now I've got access to capital, right? How did that expand kind of the opportunities that you started to look? You're looking for rental real estate. Where did you start looking and why?
Okay. So the biggest hurdle in my life, as previously mentioned, was I was not in the position, I didn't have the money for down payment, right? So the light bulb went on when I realized that by redirecting that TSP 401k money, I didn't change my budget. I didn't travel less. I didn't eat out less. I didn't do anything different. I didn't cut cable. I didn't do some of the things that some other financial wizards out there tell you to do. I was still enjoying the same life I was enjoying. I redirected the money, and now I was able to loan that money to myself and get involved in real estate. And I live in San Diego, so anybody that's in and around California knows what real estate prices are like right now. And trying to come up with money for a purchase, I mean, the purchases are huge. Where I live in San Diego, you pretty much can't get anything for $500,000. It doesn't buy you anything, which is kind of ridiculous. So what I did is I looked around the country. I'm looking for cash flow, right? Because I want to build up that retirement income. I want to build up a situation where I have financial freedom and I can work because I want to instead of being required to in order to survive. So I'm looking for places where the rents are well above the mortgage.
Mm-hmm.
I was looking for places that had fair landlord-tenant laws that were kind of skewed towards the landlords instead of the tenants. So also California's out. I was looking for some places that had reasonable income tax rates on the state income tax level. So again, California's out. Yeah. So I found a couple different states that appealed to me. One was Ohio, one was Alabama. And at that point, I reached out to some real estate agents in those areas. And the one that made the most sense for me was somebody who was kind of already doing what I wanted to do. He was owning real estate and renting out real estate in pretty large numbers. So we talked. I picked Ohio. I picked him. And I started shopping.
What'd you find?
So kind of fast forward over the few months, I've only been actually purchasing real estate, I think, for right about 3 months now. And so far I have a fourplex, a duplex, 3 single family homes, and then I'm currently in escrow now for another fourplex and another threeplex.
Awesome, man. Congrats.
Yeah, thank you. Thank you.
Absolutely.
If your goal is to have your passive income to be more than your monthly expenses, then you need to check out our summer series, which is why we entitled it Your Path to Financial Freedom.
Our summer series consists of 3 webinars where we're bringing on industry experts to share some of the best passive income business models that we've come across. We are putting them all here together to help you build wealth and create passive income without the risk of Wall Street.
See you there. That's cool. Now, but explain, because not all of that was done through your policy. I don't want to give a misconception that we turned around and bought all these doors
Correct.
through the policy. How did you get some of the other funds?
Yeah, correct. So some of the funds came from that first policy loan that I took out of my policy initially. And then some of the additional funds were, I was fortunate enough that several years back, I purchased a home in San Diego. It was a duplex at the time. So people have heard the term house hacking. So I lived in one side as the owner occupant and I rented out the other unit. Since I had moved out of that, started a family, so we have a different home, and I sold that property, and now I'm using those funds additionally to purchase additional units in Ohio. So it's kind of a mixture of both things.
Now, there's a lot of ways to create passive income. What made you choose real estate?
In my opinion, and I'm just a regular guy, my opinion, real estate is the safest long-term investment that any American can make. Even if you pay too much for it, you get too high of an interest rate, you find tenants that maybe do damage to your property, all the worst case scenarios. If you just apply time, allow time to pass, years and years pass by, and even if there's dips, the value of that property has always gone up, and I feel that you're always going to be a safe bet with real estate.
Awesome. I was going to jump back and, right, so now you're building your portfolio properties, and you've also built another policy, right?
I have, yes.
Yeah, tell us how you kind of came out, because that's one question I often get as we kind of talk to people about building policies and then a portfolio is how do you make that jump to the second policy? So if you could you tell us how you funded that one and how you came to decide on how to do that?
Sure. So initially, whenever I decided to redirect my TSP money to my first policy, what I did is I went down from the maximum of $19,500 per year down to 5%. And the reason that I did that is I was still inputting 5% into my TSP because my employer would match 100% of that first 5%. So free money, right? So who wouldn't want to do that? So I still had 5% going into my TSP. And then I still actually had a term life insurance policy that I had purchased years ago from another company. And then I still had a car payment at the time. So as I was utilizing this first policy and purchasing real estate, I was still continuing my education, right? So I was still purchasing books on the concept. I'm still reading different authors, just trying to grow my knowledge. And you can hear the same thing from several people, and it might not click until you just hear it the right way from the 10th or 20th person, So there was a book that I read that it kind of clicked, where to find some of the money. And I realized at that point that I should probably just stop wasting my time with the 401k and deferring taxes until later. If I got a second policy, I wouldn't need the term policy, so I could cancel that. And then I actually had a little bit of extra funds left over from the real estate and whatnot, so I finished paying off my car. So basically I made my car payment, my term insurance payment, and that 5% that I was still putting into the TSP, and that was enough for policy number 2.
Awesome, man.
So go ahead, Cam.
Oh, go ahead.
So what's next?
Yeah.
What's your ultimate goal?
So the ultimate goal for me is I want to continue building my passive cash flow through real estate. That's my ultimate goal. I want it to surpass what I'm making at work. I want to get to the point where I don't need to be at work unless I really want to or I really enjoy it. I want to be able to take care of my family, and then, of course, build up a wealth of assets that I can eventually pass to my son. So that's kind of the path that I'm undertaking.
So you mentioned several things in there as far as kind of the goals. One of them being having your rental income surpass your salary. Is that something that you've looked at and tracked? Yeah.
So I'm not sure if everybody's familiar with a 1031 exchange. It's an IRS tax code that allows you to defer taxes to a later date on the sale of rental real estate. So my investment real estate in San Diego that I sold, I'm actually in the process right now of doing the 1031 exchange. So there's real estate that I have to continue to purchase up to that sales price of my previous property. So I'm still doing that. So I don't have exact numbers quite yet. Just an estimation of the direction I'm going right now. If I continue on the same path, I think next year, 2022, my gross income from my rents, of course, this is just gross, but my gross income from my rents should probably equal or surpass my gross income from my W-2 job.
Very cool, man. Congrats.
Thank you.
Yeah, that's an exciting goal to keep working towards.
Now, and kind of what I'm hearing, if we kind of step back a little bit, a lot happened to you in a year.
Quite a bit.
Before this, you were not living within your means.
Nope.
Right? Just putting your money, in your, 401k type of plan.
Mm-hmm.
But then now you've totally reversed. You're living within your means. We've redirected the funds from your 401k type of plan. And now you're creating this passive income. Mentally, how does that feel?
Oh man, so I definitely wake up more days now smiling than I did before. That's for sure. Yeah, it's nice. It's nice to have additional income. It's nice to have that passive income, because really I I'm earning money on other people's efforts, right? Because that income is coming from tenants. And those tenants are working jobs and they're getting paid, and then they're sharing that money with me. So that's kind of one of the best feelings in the world, man, is to know that I'm sleeping or I'm at work or I'm on vacation or whatever I'm doing, and somebody else is paying down my mortgages and paying my bills.
Yeah, that's nice.
Yeah, I love it, man.
So you mentioned at the beginning that it was really an ad about generational wealth that really caught your eye. And then just a minute ago, you'd mentioned being able to pass some stuff on to your son, right? Is that what's your vision there? How much do you have a tangible number that you want to be able to pass on, or what's your vision there?
Yeah, so kind of initially when I started this journey, I know these numbers kind of sound crazy for the average person, which I'm just the average person, but anything's possible if you work hard enough. And so the path that I'm on right now, I think is going to kind of surpass my initial goal. But my initial goal was through death benefit and real estate assets and everything that I could leave to my son one day. Hopefully it's quite a ways from now, time-wise. But my ideal situation was somewhere between 5 and 10 million in assets. And I think it's going to be more than that.
Now, it's one thing to leave somebody some money, but we got to make sure they know how to use it.
It's a big part of it,
right? And I know Noah's only 4.
Yes, yeah.
Right? So he could probably read already, right? But
he's working on it, yeah.
Okay, but I would love to have a picture of him reading Becoming Your Own Banker. But how are you going to teach him some of these ways?
Yeah, so we all kind of believe in the infinite banking concept by Nelson Nash, and we also believe in Rich Dad Poor Dad from Robert Kiyosaki. Big fans of both those books, and for anybody that's watching or listening, absolutely, if you have not read both those, do so immediately. I wanted to get into real estate for many, many years, just didn't have the funds, but I knew that I wanted to teach my son the right way so he could avoid some of the mistakes that I made, living with his means, not building up debt, things of that nature. So in our closet, and he's not old enough yet, but I already have the cash flow games from Robert Kiyosaki, brand new, still in the wrapper, just waiting for him to get old enough. So we got Monopoly, we got some credit card ATM games, and we got Kiyosaki's games. So that'll be his first educational venture one day, kind of make it fun for him and enjoyable.
Well, and then I also know you're in the process of getting a policy on him.
I am.
So tell us the thought process.
So, kind of looking at long-term goals and what the future holds for our country, tax rates, pensions. I mean, who knows how that is going to play out 40, 50, 60 years from now. So I just did some math, and I was like, man, what if I just throw a couple $100 a month into a policy for him? He's got way more time than I do for that, uninterrupted compounding interest to just continue to build on itself. And then as he becomes an adult, if he's, responsible, he could take over the policy. I mean, a couple $100 to him at that point is probably going to be nothing, with inflation. So by the time he's retirement age, he should have cash value of somewhere around $1 million. And I know that $1 million then won't have the same value as $1 million now, but along the way, all those years, if he taps into that cash value, leverages it, and joins into the real estate, I think he could do great things, and he may never have to work a quote-unquote regular job his entire life.
That's awesome.
That's pretty exciting for me.
Yeah, right?
Yeah.
Here's a question we ask a lot of people is, what would you tell somebody that's listening that's maybe sitting on the fence with IBC?
I know this may sound overboard to some people, but man, do it. Do it yesterday. Do it right now. Get on the internet, get on the phone, get a hold of these guys, and get started today.
Good advice.
Yeah.
No, but seriously though, so the way that the compounding interest works, we all kind of understand that because we learned it in school when we were younger. Those dollars that you put in at the beginning that have been in there the longest earn the most. So why would we start tomorrow when we can just start right now?
It's funny you mentioned earlier, you're saying the magic of real estate was really time.
It's all time. Everything's time, man.
Yeah, and I would, you look at a policy, and man, the longer a policy is enforced, the better it performs. Right, so they both have that same feature going for them. But now I know that you probably are the anomaly at the workforce, right? At the office is Man, and I know you're excited about this idea and talking about it, man. What's been the reception with some of the other colleagues and stuff that you've been talking to?
So, of course, government employees, pension employees, you kind of just put your head down and grind, right? Put your money into your deferred compensation, get your paycheck, kind of just live and then hope to get retirement and hope to have enough to survive, right? So that's kind of just the mantra for most. Once I found this concept and I started doing the real estate, started making purchases, I'm sharing what I'm doing with people, and some people are really kind of standoffish. Like, oh man, this is crazy. That's snake oil,
Yeah.
But there are some that have kind of believed in it and watched what I've done. And there's actually a few of my coworkers now that have gotten involved and they've started their own policies. And there's one of my coworkers has already made his first loan or taken his first loan from his policy. And now he's in escrow purchasing real estate himself. So hopefully this thing kind of expands and allows everybody that I know, my coworkers, my friends, for them to take the same journey I am and not be dependent on the government or the pension or Social Security.
You know what I think is funny when someone says, oh, like that snake oil,
Yeah.
right? We're talking about a product that's been around since the 1700s versus a government created account that's been around since the 80s.
Yeah.
Yeah.
I mean, where are you going to get snake oil?
I know.
Right? From the government from a few years ago or something that's been around that's proven the test of time?
Well, we all have our opinions of the government and whatnot, but generally the programs and things that the government do, it's not necessarily for our best interest, but it's more designed for their best interest. So we got to kind of keep those things in mind when we're deciding where to put our money.
Nick, I got a question for you. I don't think we asked you this, but a lot of people listen to this, and right, it's one thing, like you said, is to hear somebody tell it to you, and sometimes it just takes listening to somebody different. Would you be open if somebody was listening and wanted to call you and kind of talk about their experience, or if they wanted to take, pick your brain on some stuff?
Yeah, absolutely. I am just a regular person. I'm no smarter or better looking or better off than anybody else out there, man. Legitimately, I'm just a regular guy.
That's true. I mean, I've known you for a year. Yeah, you're right.
Appreciate that.
I'm not gonna argue there.
But no, seriously, if somebody would just like to talk or email back and forth or chat on the phone or whatever, I'm more than willing and open to do that. I'm open to tell people what I'm doing, the journey that I've taken, some of the obstacles that have popped up from time to time. I'm happy to share, man. I'm an open book.
Awesome, man. I gotta say it's exciting, right? This is the part of kind of this whole job or this career that you really feel pretty excited about, is seeing somebody kind of grow and look for new opportunities. And you know what? For what it's worth, man, I'm really proud of you. This is awesome to kind of see this transformation over the last year.
Yeah, I really appreciate it. And I think about a year ago, when COVID was starting and whatnot, if somebody had sat down with me and said, hey, you're going to not be contributing to your government retirement plan, you're going to put your money somewhere else, you're going to own more real estate, and in a couple of years, you're going to actually make more off the real estate than you do at your job, I would have looked at them like they were absolutely crazy, just bonkers. And yet, here we are. It's pretty amazing.
Well said.
Yeah.
Well said.
Awesome. Let's wrap it up there. What do you think?
I agree, Nick. Thanks for coming down for our interview and sharing your story. And also thank you for letting people, kind of reach out to you personally, because a lot of people are out there, they're reading books or listening to podcasts. And it's one thing if you're talking to the person who's like, quote unquote, selling it.
Right.
You're got to take everything they say, even with what we say, a grain of salt, right? That's why we encourage you, do your research. Don't just watch our videos, watch other videos. Don't just read Become Your Own Banker. Do all of your research, because we want you to know the ins and outs of it as much as you can, because that's how you're going to make the best decision. And I think the research you did allowed you to feel comfortable with this, allowed you to rationalize taking money out of your TSP. And I feel that's paying dividends now.
Oh, yeah. Way more than it ever would have if I just left it in there.
And what is paying dividends is not only to you, probably more importantly to your son, right? Yep. We got to teach the next generation how to fish.
Absolutely.
And that's what you're doing. So thanks.
Awesome. Thanks, Nick. Thanks for joining us in studio.
I appreciate it, guys. Thanks for having me.
Go make it a fantastic day.
Take care.